The title of your note, Price Cutting to Victory. As Joe said, maybe you're one of the analysts on the street who wasn't all that enthused about what you got.
Look, I think you all said it pretty well, that expectations were low and they managed to modestly beat those. But in absolute terms, the business is not particularly healthy. We had iPhone revenues down 17%, despite the fact that Apple had to cut prices to stimulate demand in the quarter. And this is the biggest part of the business. It's 55%, but if you add in Mac and iPad, which are businesses that are really X-growth as well, you have 75% of the company that ultimately is unlikely to grow and more likely to decline over time. And that remains the core issue. I get the fact that the stock is up. Expectations, particularly in the back of Google, people were a little bit nervous, and they did boost their revenue outlook relative to street expectations. And so versus where investors were, this was a bit better. But if we step back and think, is this business really healthy today? There's still very big questions around the fate of the hardware-centric businesses, most notably the iPhone business.
Do you think services and wearables are going to grow fast enough to make up for any weakness with the iPhone?
I think over the next few years, revenues will be about flattish for Apple. So the math works that if 20% of the company is growing 10 to 15, that can offset maybe a 4% decline in the remainder of the company. And I think a 4% decline per year is probably not a unrealistic outlook for that collective set of hardware businesses.
You surprised the stock's up 7% today? I'm trying to remember, another period where if we would have said revenues down 5, profits 16, iPhone down 17, would the stock be reacting the way it is? Or how much of it is a relief rally? Because, Mr. Cook says China's getting better, things with the iPhone, we're going to ramp it up, et cetera.
Yeah, I'm surprised at the magnitude. I'm not surprised it's up. Again, the stock was down 2% yesterday. Google had talked about slowing TAC growth, which impacts Apple's licensing revenue. So I think investors were a little bit nervous about that yesterday. It was down 2. And then you had some raise in numbers. So we would have expected it to take back the full 2 and then a little bit. So maybe up 4 and it's up 7. So it's a bit stronger than we would have anticipated.
What do you make of, some of your competitors on the street saying these results prove that Apple is no longer a super cyclical hardware company? They have these other really viable growing businesses.
Well, look, I don't want to detract any credit from what Apple's done with the services business. They've built a $40+ billion business that's growing in the mid-teens, which is, a real testament to both execution and their vision for what this business can be. Now, that said, by definition, if your profits are down 16%, you have a business that's intrinsically cyclical. And what we are seeing is really the manifestation of that in the current iPhone cycle. Cyclically, people are saying this is not a phone at this price that we want this cycle. And so iPhone is down significantly. Now, next cycle, or 2 cycles from now, when 5G comes along in September 2020, we could have consumers say, wow, this is a phone we really need because 5G is pretty compelling. And revenues could be up double digits. By definition, that's a cyclical stock.
So you don't think Apple deserves a higher multiple than what it gets right now?
Look, when I look at the multiple right now on a relative basis, so adjusting for market price changes, it's at its peak multiple for the last 5 years. Now, on one hand, you could say the company deserves a better multiple because services is a bigger part of the business and services is a richer multiple business. On the flip side, you could say we've just had the worst iPhone cycle in history, and there's more evidence that this business is both cyclical and more likely in structural decline over time. And so you can debate those forces. My sense is they roughly weigh out with one another. And so it's not clear to me that Apple should have a materially higher multiple today than it's had over the last 5 years, and we're essentially at the high for the last 5-year period. So for me, it's not obvious that the stock has another material leg up unless we see something new, that some of the new services really catch on, or that we enjoy a strong iPhone product cycle, in which case you'll get a cyclical lift in the stock.
I wonder, Tony, though, whether the market has gotten sort of tired with the narrative that you and maybe others who are more cautious around the story are continuing to tell. I mean, maybe the company continues to do really well. It's the degree of well that you don't really seem to want to get your wholehearted body around and say, you know what, this stock should be a buy. The price target should be 2 something because that's where it's going, whether I like it or not.
I mean, it could be. Look, it's hard to say. The company bought back 6 to 7% of all shares traded last quarter. That's a pretty strong buy bid under the stock, and could be pressing active investors to take up their weightings relative to their benchmark, simply because Apple's helping drive the stock up, and when the stock's going up and you're underweight, you're sort of forced into increasing your position to a market weight. That dynamic could be happening. When I step back and say, let's think about this business not in quarters, not in cycles, over the last 5 years, what we've seen is essentially revenue hasn't grown. We've seen gross margins go down and operating margins go down. That, to me, doesn't suggest that the total portfolio of the company, including services, is getting better. It suggests that the company's going through a transition, and right now, the degradation in hardware is winning out over the improvement in services. Now, that might change over time,